Welcome to another trade recap video. We're going to be reviewing the trade that I took yesterday, Monday, the 27th of July, during New York Open on the Nasdaq to secure 1.5 R on my account. Without any further ado, let's dive into it. As I explained in my previous video, I have blown my funded account that I was trading for the last 3 months. Combination of variance of good trades, a couple bad trades, and then I had like $300 to $400 left in trailing drawdown, and I blew the account from there. Moving forward, I don't want to put pressure or all the pressure on one account, so I bought 5 evals from Lucid, and I'm gonna be trading them separately, one by one. The goal is to buy 10 evals in total and pass at least 3 of them. I'll explain in a second why. And here is a proof of equity. So the only trade that I took yesterday, according to the consistency rule, I need $3,000 in 2 attempts minimum. So I went for $100,500 in profit, risking $1,000. And that is what I plan to do for all these evals. So today I will be trading the next one and moving on, just rotating until I'm back at the beginning. Now, why do I do it this way? The reason I'm gonna be focusing on multiple accounts, but rotating them instead of focusing on one account and then aiming to copy trade multiple accounts in the future, is because I wanna lower my risk of ruin due to potential variance, and I wanna lower my risk of hesitation. I found that my trade execution is lacking because of hesitation, stemming from a too low trade frequency, focusing on 2 to 3 setups, A+ setups a week, and risking higher. It weighed too much on my execution, and therefore I was under trading, missing too much good setups. So by raising my trade frequency, I'm allowing myself to rotate through these accounts, adding entry models to my system that remains the same. And it just allows me to divide my risk over my accounts using my prop firm accounts, or treating them as a portfolio rather than treating them as one big live account. So it allows for more variance, less risk of ruin, and less hesitation. So that's what I'm doing moving forward, optimizing for pass rate and payout rate instead of win rate. Moving on to the charts. First trade and only trade that I took yesterday was during New York Open. I plan to take only A+ setups on these evals for now until I have a bigger bankroll. And then I'm willing to take A setups as well, and not just A+ or S+. But for now, only S and A+ setups. And the first one I found was in New York. So coming in the market, we could already see that price was very bearish, or at least according to my strategy, I was longing more for shorts. Why? We took out this daily gap in between London and New York, which of course is gonna be a point of reaction for price, most likely. It did exactly react from that daily gap. Then we got a 1 hour continuation right here at 9. The 1 hour gap got tapped in and price started flushing down, actively going for a 4 hour draw, which of course is one of the best targets there is. Asia low was available, and of course this new week opening gap. Both the beginning and the end you can target basically. Usually the whole gap gets filled. Not usually, it's just more likely that the whole gap gets filled at some point, and I found in my data that it is a good draw. So I was longing for shorts, or I was leaning more towards shorts. So when market opened, we immediately took out those key draws, both the 4 hour, Asia low, and the new week opening gap. I like to put my draws here so that I know which ones are taken. For now, Then immediately price reversed and we inversed this 930 gap. Sorry, we inversed this gap to go to 930 high, which was right here. This was actually a mistake setup. I didn't take it because I wanted to wait for the 1 minute to be completely inversed, and when that actually happened, price shot up too fast and I didn't get a chance anymore to get in a trade. That was a textbook setup. That would have been a good 25 for 38. So I wrote that down in my journal that I missed this one, and this is a trade I want to be taking in the future. Why? Price leaves 930 high, a very prominent draw to be taken, especially in opening range momentum. But more importantly, we come from buy side, we take very important sell side, a 4-hour gap, Asia low, and a new week opening gap. And then we get an immediate V-shaped reaction, inversing this gap right here, and we target 930 high. But we always, or at least the way I'm trading now, is always targeting a 1.5 for a static stop loss rate. So that would have been a good first trade. I didn't take this one, didn't get it. It didn't take 930 high either. Price then started flushing down further. I believe ES still had major draws. It still had the new week opening gap open, right? So either way, Nasdaq was flushing down as well. And then right before 9:45, I like to mark out opening range low and opening range high, which is the high and the low created between 9:30 and 9:45. And one of my favorite setups as of lately has been price tapping in the 1 minute gap or a higher time frame gap right before opening range low. So price is setting this opening range low right here. It officially is only set at 9:45, but I found in my data that on trending days with momentum, we can enter before 9:45. So when price taps in the first gap that is created right before opening range low, I put my limit order right here for 25 points, making sure that I had 38 to the draw. So I put it a bit above. I got tapped in right there. And then I got lucky to not be stopped out in the first place because price created a 2-minute gap as well. And it tapped that 2 minute first before eventually flushing down. I think I got in at around there. So I got lucky not to be stopped out and then immediate take profit. So that was my first and only trade on the day. Good trade on eval, both on funded. I would take this one as well. One of my favorite setups. In the last 2 weeks, out of the 6 times it occurred, it won 5 times. So that's nice. Of course, it's backed by more data than just the last 2 weeks. Opening range low, opening range high. In general, my favorite draws to take, especially the first one of both. Chances that both get taken out within my trading session are not that high, but chances that either of both get taken out within my session are very high. So only waiting for a clean fair value gap continuation to one of those draws would be a bit too defensive. So I like to take other entry possibilities to either of those. For example, a fair value gap tap in or an inversion or just very clean displacement. So that was my one and only trade on the day. Nasdaq ran, I think, 450 points from the start of the session. For me, I couldn't find anything else that I was convinced in taking just because we had taken so much already. We took out previous day low as well. ES was running all those draws. So yeah, there was crazy momentum, but nothing that I was confident in taking at the moment, especially since I want to be taking only A+ setups on these evals and fundeds until I am eligible to take a payout. I don't know if that's the correct word, eligible. Anyways, thank you for watching. If you have any questions, leave them in the comment section down below. I'll be very happy to help you. Other than that, wish you the best day of your life so far. What that means is tomorrow is gonna be even better. Goodbye for now.